everyone. Welcome to the Prime Quadrant webinar, Finance Career Kickoff. What I wish I knew is for students pursuing a career in finance. We're really looking forward to the next hour with you. We're going to start with some questions for our panelists, and there will be time for you to ask your own questions towards the end of the call. So just quickly, for those of you who are not familiar with Prime Quadrant, we are a family office consulting firm. We provide services across the family system ecosystem. So that means that we are sometimes acting as a chief investment officer or sometimes as a chief financial officer. We provide everything from investment diligence to reporting. And you can think about us as a fractional family office for families that really want to have advice that is unbiased and not attached to any platform in particular. We are a true consulting firm. And we operate on 4 primary tenets, which we call PATH. The first is we try to be purposeful in everything that we do. The second is we are authentic in all of our relationships. The third is we are tenacious. And the fourth is that we are humble. So those are 4 of the primary characteristics that we strive to all embody at Prime Quadrant. And so with that being said, I'm going to begin to introduce our panelists today. Our first is Deborah Lee Chang. Deborah Lee Chang is a senior consultant at Prime Quadrant. She's a seasoned investment professional with over 25 years of experience managing investments for both institutional and private clients. Prior to joining Prime Quadrant, Deborah was lead portfolio manager in institutional, mutual, and pension funds, and strategies following a value mandate at TD Asset Management. Deborah started her career in equity research at Jones Howard Investment Management, which is now part of the Bank of Montreal, before becoming portfolio manager at Canadian Equities. She has a long-standing relationship with the CFA Society in Toronto, having served as its president, chair of its board of directors, as well as chair of its governance and membership committees. She founded the mentorship program, which won the CFA Institute's Award for Innovation. Most recently, she was an adjunct lecturer for the Master of Finance program at the Smith School of Business, Queen's University. She is a graduate of the University of Toronto with an honors Bachelor of Commerce degree, and she is also a CFA charter holder and has experience as a registered commodity trading manager. And one of the personal things that I find interesting about Deborah is not only does she do scuba diving, but she is a practitioner of Kendo, which is a martial art. We also have with us today Cameron Piening. He's a senior investment analyst at Prime Quadrant. Prior to joining Prime Quadrant, Cameron worked as an investment analyst at HSBC Alternative Investment Groups in London. He was responsible for performing quantitative due diligence on hedge funds, in addition to assisting in the portfolio management of the open-ended commingled hedge fund offerings. Prior to that, he was an analyst on the global graduate program at HSBC Global Asset Management, gaining experience in private equity, hedge funds, multi-asset, and corporate strategy. Cameron holds a Bachelor of Commerce from the Smith School of Business at Queen's University and is also a chartered financial analyst. He holds the Canadian Securities Course and Investment Management certificates. We also have with us today Mussie Hailu. He is a consultant at Prime Quadrant. Before joining Prime Quadrant, he was an analyst at Fiera Capital on the private markets team. He supported the construction of diversified pooled funds allocating across the alternative investment spectrum. Prior to joining Fiera Capital, Mussie worked at a single-family office where he supported in evaluating and monitoring external managers and served as the lead for the family's angel capital fund. He has earned an honors Bachelor of Commerce degree from the University of Ottawa and is a chartered financial analyst as well. We also have with us today Sharlene Ackerl. She is a senior private client associate at Prime Quadrant. And prior to joining Prime Quadrant, she was a junior research analyst and summer associate at Spartan Fund Management, where she worked under senior fund managers researching public equities. Charlene graduated from Western University with a Bachelor of Management Organizational Studies, specializing in finance. She was part of several clubs, her most substantial role being the finance executive of the Wildlife Conservation Society. She is currently a CFA Level 1 candidate and is an exempt market dealer. So that's who we have with us today. And I'm going to start with our first question. Sharlene, if you would like to kick us off. Most people do not want to grow up to work in finance. They dream of becoming an astronaut or a fireman. When did you realize your passion was in finance and why?
Yeah, definitely. I was not someone who knew from the get-go that finance is where I wanted to be. Something that you might not know about me is I started university in biology, and after 2 years, it became very clear to me that it is not where my passion lied. Um, at the time, I was very fortunate enough to have some finance professionals in my close circle, and after I expressed an honest interest in that field, I landed that summer internship at Spartan Fund Management. This is when it became very obvious to me that I was interested in finance. I wanted to continue to learn, and I was so fascinated by the many paths that you can take in this industry. So I wouldn't say that it was any one particular moment when I knew finance was my passion, but probably something that developed over time. And as I continue to be excited to learn, it doesn't feel like a chore to work and study. And that's how I know I'm on the right path now.
I love that. That's what they say when you're in the right work, it doesn't feel like work.
Mm-hmm.
Musai, would you like to take that question as well? When did you first realize that finance was your passion?
Yeah, I think similar to Charlene, it wasn't immediately obvious to me. Um, Initially, actually, I was going to go into economics because I had read the book called Freakonomics and I thought it was fascinating. And my father was an economist by background. And he ultimately dissuaded me from going down that path, too academic. And if you're not going to do a PhD, it doesn't make a lot of sense. So I started contemplating what are some sister subjects? What are my skills? I was strong in math. I enjoyed accounting and business. So there seemed to be some alignment there. And after doing a fair amount of reading, just some common books that you can find online, it piqued my interest and I wanted to explore it more. So I started my degree at the University of Ottawa in business, specializing in finance. And the more I learned, the more and more I found it interesting. Markets are always evolving. There's new products. The pace of innovation is fast. It's intellectually stimulating. So it was one of those things where it piqued my interest at first. And the more I explored, the more my interest grew.
You mentioned the book Freakonomics, which is a great book for anyone who's interested in economics. Was there a particular book that really got you interested in working in investment management?
So the most common book is the tome, The Intelligent Investor. I find a lot of the concepts there are a little bit antiquated now, but in terms of providing a pretty solid idea of what it means to analyze a security and understand how capital markets worked, I thought that was a pretty good foundation.
For the Intelligent Investor. Great. Thank you for the recommendation. All right, let's move on to another question now. Deborah, what are some of the biggest misconceptions that people have about working in finance that you wish they knew before they chose it as their career?
Yeah, it's a good question. I guess the number one thing that pops into my mind is that when you speak to someone who's contemplating finance, they may be lured to it, or they may reject it because in their mind it's investment banking or IB IB. So, it's not the only thing, to the points made by the other members of the panel. It is a vast, vast area, and there are so many different interesting roles and career paths that are possible. So if I had to say, one of two things, that would be it's not just investment banking. There are obviously paths involving wealth or research. So just to name a couple of different ones that are also very popular. The other misconception is that, and I know I suffered from this. As soon as you graduate, you think this is it. I've graduated from university. Where's my corner office, right? You think it is one of many milestones in your life. And yes, it is a very big thing to graduate from university, but the work doesn't stop there. It can, but the most part, it doesn't if you want to achieve something greater. So it's continuing to push yourself and continuing to pursue that path to greater things. I mean, whether it's more self-fulfillment or whether it's further steps in your career path, the work doesn't stop.
That makes sense. So you're saying there's it's important to have that mindset of a lifelong learner, which I resonate with. And when I first started in this career, the way people invested for families is very different than what it was today. I'm old enough that ETFs didn't even exist when I first started investing.
Yeah, I'm with you there.
Being a lifelong learner is so important to longevity in this career. Cameron, how about yourself? What are some of the misconceptions that you wish people wouldn't have about working in finance?
Yeah, so interestingly, I had the same answer as Deborah, and it's probably because we're both from the Smith School of Business, and maybe they hammer into your mind that you've got to go down this investment banking route. But maybe to give an example, as I went through it, don't want to say how many years ago because it's getting to be a big number now. But when I was in second year, they kind of start putting you down this path of, you have to go through investment banking or a sales and trading kind of route. And I wanted to try something different. So in second year, took an internship at RBC in their international private banking department just to kind of get some corporate experience. Didn't really know what I wanted to do and found that pretty interesting working with clients, but then didn't really know if that's exactly what I wanted to do. Wanted to try something different. So next year I did another internship at RBC, but did it in their wealth management department in the investments business and liked that a bit more, but maybe wanted to hone in a bit more within investments what I liked. So ultimately, when I was looking for a full-time job at the end of third year and kind of the start of fourth year, wanted to kind of expand my funnel a bit and try something new. So looked at HSBC, and they had a great graduate program over in the UK where you get exposure to all different areas of the asset management business. And this was really great in the sense that you got exposure to the risk department, product, sales, and investments. And ultimately, I liked the investments department the most, but I found it super valuable that you get insights into all those different areas. And then once you got into the alternatives business, there's so many different alternative asset classes to learn about. So ultimately, I joined the hedge fund team. But I think the key takeaway is that you just need to have an open mind about your career path. You don't know necessarily like where it's going to end. You may start off in a certain role, and that's just going to evolve into finding something that you like more and more, and it's just going to keep getting more and more niche to find what you ultimately like and kind of where your skills match. So more chance than not, you're not going to be in your first job forever. So just keep it open.
If you're willing to share the name of the program, that sounds like a great opportunity for other students who might want to have sort of a sampling across what's possible in the industry. Do you mind sharing the name of that program?
Yeah, it's just called the Global Graduate Program, and these programs are much more common in the UK, where it's essentially usually a 2-year program and you spend 6-month rotations across different areas of the business. I know they do some in Canada as well, though. So just look out for those type of opportunities where it's essentially a 2-year program and you get exposure to so many different jobs that you just can test and see what you like and what you don't like.
Thank you. Mussie, I'm curious, what was your path to success? And also, how do you define success? Did you start in one area of finance and pivot later once you had a sense of where your skills could best express themselves? And where have you kind of hit your stride in this career?
Yeah, so I'm originally from Ottawa, where investment management roles there aren't that many to go around. So initially my roles were mostly back office type roles at financial services firms. Mostly focused on operations, so pretty administratively heavy, operationally focused. But I knew that I wanted to work on the portfolio management side. I knew that I was interested in client advocacy, and I wanted to work with sophisticated investors and engage in portfolio construction and risk management. So despite the fact that I wasn't really working specifically in a role where I would gain exposure to that, I was always speaking to other people, introducing myself to them, trying to glean whatever knowledge and wisdom from them I could gain. And I found that people were pretty willing to share their time. Eventually, I applied for a job without, sort of unbeknownst to me, it was for a single family office, but I thought it was for the operating company. And it was a really junior role, mostly focused on liquidity and cash management. But that was where I was able to cut my teeth initially in the role of investing. It was a small team. It was dynamic. It was just myself and a director. So despite the fact that my day-to-day was focused more on liquidity and cash management oriented tasks, we worked closely with really intelligent advisors. I was able to sit in on investment committee meetings. I gained a network. I met really interesting people. So kind of learning through osmosis. So I kind of started in a place where I didn't really want to be, but I just needed a leg in. And then I leveraged relationships and learning from osmosis to kind of maneuver into the field. Eventually, I moved onto the sell side for a firm called Fiera Capital. I moved to Toronto.
But just to draw on his point a little bit, back office roles, especially at the beginning of a career, they're important. When I think about my own trajectory, I had an assistant in the back office when I first started in wealth management. His name was Luis Arango, and he was doing the most ordinary of tasks. I mean, they weren't particularly fun tasks. There's a lot of paperwork and subscription documents and not fun stuff. But he was so good at creating relationships and asking for mentorship and networking that he now runs the entire international private bank of the institution that he started as a back office assistant. So never underestimate the back office roles at the beginning of a career. Deborah, do you want to speak to that question as well?
Sure. Some of my answer would touch on the points that Cameron had made earlier in terms of what the number of jobs you may encounter after your graduation. So, I mean, I have worked in a number of different roles. I started off as a research analyst for an investment team at a major bank, but I have also managed a $6 billion fund for TD taught finance at Queen Smith School of Business, and I've managed $100 million client family portfolios. So all of these require a different skill set. It's not just expressing your strengths, but it's being aware of and managing your own weaknesses, because I am naturally an introvert, and I'm not a natural speaker. But I did understand very early in my career that if you're going to actually advance, you've got to work on those attributes where you are not at the strongest. Everyone's got their strengths and weaknesses, so I do think it is beneficial to understand yourself and be aware. I could have been a research analyst my entire life and said, okay, this is where I prefer to be, but there are so many opportunities if you can expand and look for growth outside of yourself.
Well, Deborah, if you don't mind me saying, I think that you're the exception more than the norm from what I see in finance. A lot of people who are naturally introverted do tend to stay in research-oriented roles, and they'll do that for their entire career because that's what's comfortable for them. And then somebody like myself, I'm naturally more of an extrovert. We end up being in more client relationship, sales types of roles. So kudos to you for being able to stretch beyond your comfort zone in that regard. It's not entirely common.
Yeah, I would say that being a research analyst, some people may say, okay, I'm pretty safe from not having to do any speaking whatsoever. But I know from experience that you get to a certain level and you're having to hit the road to do marketing or to either talk about investment ideas or your funds. And if you are not able to communicate, it becomes very difficult.
Yes, I agree with that. And also to have conviction in what you're selling, essentially. So I always wanted to be more in research roles because I didn't want to have to ever sell a client something I didn't completely believe in. And one of the beauties about being at a place like Prime Quadrant is just by the way our platform is built is we have nothing to sell other than pure unbiased advice, which makes it very easy for me to be in a client-facing role and where I actually enjoy selling quite a bit. It doesn't feel like sales to me. It feels like sharing truly an authentic story that has tremendous value for families in our ecosystem and outside of our ecosystem. So it's for somebody like myself that actually would prefer to sit and do a lot of research. I feel very comfortable being in a client-facing role in a place like this where I actually believe in what we're doing. So I think that that's an important part of it as well. All right, so Cameron, I've got a question for you. What changes do you see on the horizon in financial services, and how would you prepare for them?
There's definitely a few, and maybe to hone it in a bit on what we do, I would say one is that alternative investments. We're starting to see alternative investments become more available to high net worth and retail investors. So typically these type of investments, whether it's, a private equity fund, real assets fund, private credit, etc., have only been available to institutional investors in the sense that there's these very high barriers to entry. So for, the majority of these investments, you have to have a minimum of $250,000 to invest, which a lot of retail clients can't think about doing that. And if they do, that's, a whole portfolio. So you want to build multiple positions, and one position costs 250,000. That kind of cuts you out from being able to participate. And the other thing is the long life of these funds. So they're typically 10-year lockup periods. So you're not getting the bulk of your capital back for 10 years, which might not work for a lot of, the time horizon that certain retail investors may have. And as investment managers have, tried to expand their reach in terms of the limited partners that they want to partner with, or just general investors that they want to bring on board, they've had to try and reduce these constraints. And we're starting to see it a lot in our industry where, first of all, minimum investments have come down. And now a lot of these products are, $10,000 or $20,000 minimums, and some even lower than that. And then I think the more important one and important factor, I'd say, is the lockup periods have come down greatly. And these new evergreen solutions, which is essentially just another word for an open-ended fund where you can continuously subscribe or redeem at a certain interval, whether that's monthly or quarterly. So these new developments have helped, broaden the scope and enabled more retail investors to participate. And you've probably seen certain platforms like in Canada with Wealthsimple, they're starting to offer products like this. So I think we're going to start to see more of that, more, wealth managers such as ourselves and more advisors start to try and offer these alternative investment products to retail investors. And in terms of how you would prepare for that, I guess for the listeners, learn the basics, gain foundational knowledge of alternative investments, because I know from my experience at Queen's, they don't really teach you a lot about alternative investments, maybe because it was a while ago, but I don't know if it's like a big focus for them now. So if you're getting this, base level knowledge of these alternative asset classes, it can help you a lot when you enter the industry and set you apart from different candidates who probably are starting at zero.
All right, thank you. Sharlene, how about yourself? What changes do you see on the horizon, and how are you preparing for them?
Yeah, I think obviously a lot of us right now are considering the impacts of AI on our careers, and finance is definitely one that can be affected as it's becoming easier to do analysis and the information is right at our fingertips. I'm sure a lot of us hear about the different types of AI tools that can be used. And I think it's important to lean into the software and become comfortable with how it can be used to our advantage rather than shy away from it because it's new and can be scary. There are many different ways that it can help us become more effective at our jobs and help our clients in ways that might not even be apparent to us now. And I think it would be a disservice to ourselves and those that we help if we don't become better users of it. And even more specifically into the wealth management and family office space, we are witnessing one of, if not the greatest wealth transfers of our time. We're finding that many clients are looking for advice not only on financial capital, but also on family governance and education and succession planning, which requires a great deal of discretion and emotional decisions that cannot be so easily replicated by AI. So I think we'll have to become more creative in the way we service our families and use our empathy and human connection as our leg up.
I love that answer. And I'll just add to it in case some of our listeners are not aware that they are predicting that this is going to be the first time that the wealth transfer goes primarily into the hands of women as the wealth holders. So the first time, it's a great historical shift, actually, in who our clients are going to be and potentially what their concerns will be. Now, I know that this is a question I wish I could answer myself, which is how important is the CFA charter to obtain, which could also be how difficult is the CFA charter to obtain. Deborah, do you have any thoughts on that?
Okay, yes. My answer is it depends, which may seem a little odd given that given my past involvement with the society as its president and chair of the Toronto Society. But it does really depend on the career path of the individual. If we're talking about a career in either investment management research or institutional asset management, the CFA, in my mind, is essential. I mean, it's very difficult to get around not having it, especially in Toronto. In Toronto, it's basically table stakes because I'm not sure if people are aware, but Toronto has if not the highest, one of the highest concentration of CFA charter holders within the city. So
Is that because your weather is so terrible that people have?
maybe it's been like that for a good number of years. So that's what makes it everyone has it. So it is basically the bare minimum to be able to be seen in the areas of research and institutional management. So for sure, it is very important there within Toronto, and the competition is high because the rewards can be so high. Right, so that's the flip side. A lot of people want that career, and they're willing to go for it. When I said it depends, there are areas that it would be not as essential, although it would obviously lend some credibility, and those would be in the areas of sales, trading, and possibly wealth. Where you could, it's not as essential as in those other areas I described previously.
Since you have a bit of an inside track, I have a little bit of an off-piece question for you. Is it becoming harder to obtain the charter over time, or is it just that there are more applicants, so the pass rates are lower as a result of volume?
I would say it's the latter. Some of the CFA Institute has implemented a number of changes in terms of the way the exams are formatted in terms of the use of computer marking. I mean, when I wrote, and I don't want to say how many decades that was, but it was quite a number. There were still full solution questions. You had the option of writing once a year. That was it. If you didn't, there's no other second chance. That was it. For each level, the pass rates were similar, but the number of charter holders were rare. So in my time, if you achieved the CFA charter holder at Royal Bank, you were given $10,000 off the bat for completing it. Wow. Because it was so rare. Now it's become to the point where you may not get an interview if there are no plans to write that. That's the difference.
Interesting. And Musai, what are your thoughts on how important it is to obtain the charter?
Yeah, I concur with everything that Deborah mentioned. I actually read an article in the FT recently that showed that candidacy was actually falling pretty precipitously from the 2019 high, and there were a whole bunch of reasons as to why that was the case. From my perspective, I think it demonstrates a couple of things. One, a strong technical foundation. So just building your technical proficiency, building that foundational knowledge that you need to succeed in your career, to thrive in your career. The material is the gold standard globally. I think that's sort of broadly recognized. And I use the knowledge that I gained from the designation virtually every single day, particularly CFA Level 3 I found really, really useful. And of course, I think the most important thing is that the CFA is just the start, right? That's sort of building your foundational knowledge. And then what's equally important is continuing to learn, continuing to engage. And I think if you're going through the CFA process and you find you're not finding the material engaging and interesting, perhaps this is not necessarily the right thing for you. And secondly, I think it just demonstrates certain character traits. The material is voluminous, takes a lot of time and dedication. It's self-study, so you need to be entirely self-directed. So I think it shows certain qualities that you have that an employer would find valuable: time management, discipline, work ethic, a certain intellectual pedigree. So I think, it's a major signal to me when I see somebody with the designation. It's sort of instant respect and credibility. And like Deborah mentioned, I think at this point, particularly in Toronto, it's become more of a competitive necessity than merely a competitive advantage, just given the proliferation of charter holders. So I'm an advocate for it. I'm glad I did it, and it served me well.
Yeah, I agree. I also hold my charter. And the one thing I'd like to add for anyone listening is really don't get discouraged if you don't pass a level. I didn't pass every level on the first try. I think it's incredibly common. And if you can just persevere and get through it, it's definitely worth the effort. So, Cameron, can you give me a sense of how has working in finance changed you as a person over time? And one of the reasons why I wanted to ask this question is because we spend so much time at work. I mean, most of our life is actually spent in the work that we're doing. And so how has that changed you as a person? And then adjacent to that is what professional goals are on the horizon for you next? What are you developing professionally?
Yeah, it's a good question. I would say what's changed most about me, and maybe it's counterintuitive to working in finance, but I've found that I've been less afraid to take risks, especially early in your career and early in my career. And these, I'm talking about calculated risks. So some of the best learning experiences I've had has been from stepping outside of my comfort zone, and whether that's tackling a new project or making a career move that may seem uncertain at the time. So an example of the latter, of a career move, so moving to Prime Quadrant for my last role at HSBC, there was a huge amount of uncertainty. So it's moving from this huge organization, 100,000 employees, to a small organization that at the time had 30 people. It was, in my role, I was working with institutional clients, and now I'd be working with high net worth, ultra high net worth clients, which is a completely different skill set in terms of meeting their needs. And so you had to really think about the reasons that I was doing it and ensure I was doing it for those right reasons. So it was, in my case, I wanted to have an impact on the work I was doing, or kind of see the output of what I was putting in. And oftentimes in these large organizations, it's hard to see that. I wanted to work across more asset classes, which I was able to do at Prime Quadrant. And a big one is I wanted to move back to Toronto. So I think thinking through all of those reasons, taking those calculated risks seems much more worth taking. Ultimately, it worked out well for me because I've been here now for 4 years. But yeah, I think the takeaway is that you should take these calculated risks early in your career when the downside is low. And even in scenarios where these risks, ultimately they're not always going to pan out, you're going to learn something that's going to be valuable to you in the future in some way, I'm sure.
Great, thank you. And Deborah, how you've mentioned a few times you've had several decades in this profession. So how have you?
Forget about that part. Forget about the several decades. It's yesterday.
I don't mind. I'm a seasoned professional. I don't mind.
Yeah. So I mean, it's changed me in a different way. Over the years, it actually opened up different paths of opportunities. And what I mean is actually outside of finance and work directly. What happened was that I actually started volunteering for the Toronto CFA Society as sort of a give back, because finance had been so good to me personally. And that chance to volunteer was so I gained such a benefit from it that I actually used that to leverage other positions where I could put my skill set to use in areas of the community. So I worked with at-risk youth for 5 years on board and advisory work. And so it opens your eyes for other experiences. I've sat on other advisory boards, whether it's for the University for Queen's University, with regards to their MPhil program, and so from a volunteer perspective, it's opened up a different world. So that's where it's probably changed the most outside of work and finance directly.
Oh, that's a great answer. I do volunteer work with financial literacy in high schools in Miami, where I live, and we take for granted how much we understand how investing and savings and lending works. It's really fulfilling when we can teach those to people who don't have the same exposure that we do. All right, I have a fun question. This is directed to anyone who wants to pick it up, and then we'll take some questions from our audience. So this morning on our investment team call, we talked about the Trump coin. So we have, was it the Trump coin since it's launched is what, up 500%? Was that the number? It's 5x since its launch. We have a Melania coin. We have a Barron Trump coin. And, for a lot of the students who are listening, you probably remember Roaring Kitty and meme stocks. And so we have this, I would say it's a relatively new phenomenon, which is a very large bench of retail attention to the world of investing that can make certain assets become very speculative and very quickly. But, people want to participate. People want to be a part of these stories. So what do you think about these sort of speculative wild cards in the market right now? And would you ever invest in them?
I'll step in first. I don't think this is any different than how many years ago when people would raise the name of stocks they own at cocktail parties, right? It's more of this fear of missing out. I want to be part of it, and that's what you're ascribing to. In terms of how I personally see it, sure, if you want to be part of it, that's great, but it's like taking your money to Vegas. You have set your limit and play within it, right? That's the logo. But that's basically what it is. People have to understand that it's not investing in the traditional sense. I mean, it's not investing at all. It is, as you say, it is speculation. So if you want to be part of it, recognize that there may be a huge upside, but there's potential that you could lose it all.
Yeah, and maybe even to do a little bit of historical research and just put into ChatGPT tulip mania. See what you can learn when you put in tulip
Yes.
mania, right?
Yeah, exactly.
The historical context of these things, sure.
Yeah, won't be the first time, won't be the last time.
Maybe
Anyone
I
else
would
have
say,
anything?
yeah, with these new speculative things, sometimes it's always good to stay, abreast of what's happening and staying up to date, because you never know. A lot of these new technologies, some are going to take off and some are going to go to nothing. So as long as you stay aware and just stay, knowledgeable about what's happening. In terms of any sort of like recommendation with these meme coins, I mean, yeah, like Deborah said, it's gambling. I think if you're interested in the area, you should stay maybe closer towards the more, for lack of a better word, mainstream assets within crypto, whether that's Bitcoin or something like that. And again, from a portfolio construction standpoint, there should be a small amount of your portfolio what you're willing to lose. Like I would recommend like 1 to 3%, like something small. And then maybe from the perspective of what we do day to day, like working with investment fund managers, look to participate maybe in one of those funds where you have actually, seasoned professionals who have like experience trading in these type of assets and putting your, trust with them versus trying to do it yourself.
Yeah, that makes a lot of sense. And I think that one of the underappreciated parts of working in finance, if you are client facing, is how much you are actually mitigating emotional responses to the market. And so this is a moment where we could say potentially greed might be sort of the primary market sentiment. And so people rush after these assets because they want to participate in, getting rich quick possibilities. And part of our role is to help our clients to mitigate and manage those desires and instead invest in ways that are consistent, long-term, and methodical ways of investing. So with that, I would love to hear from our students, and any questions are welcome here. They can be quirky, they can be deep. We're available to you. So who would like to start? So we have a question from, I hope I'm pronouncing this correctly, Cagla, C-A-G-L-A. Thank you so much for the insightful comments. I saw some job postings from Prime Quadrant that encourage completing the CFA while working. Are you able to provide resources or guidance for employees to succeed in the CFA exams? So does somebody have an answer for this? Would you like to share?
I think from a firm perspective, we have a number of CFA charter holders who are able to provide support at least while the team member is writing. It does require support in the sense that it is a tough exam. It is a multi-year exam, and that the firm is definitely behind providing any resources that a team member needs to be able to get through it.
Yeah, and I've certainly, just from where I sit, I've definitely seen our chief of staff be very mindful and supportive of scheduling and accommodating employees as they're preparing to write the exam. And so I know that it's an environment where that support is fairly explicit.
Just one other point on that, there is the financial support as well, where Prime Quadrant encourages, all of its employees to continuously learn. So it's not just for the CFA, but they do provide some financial support in terms of the cost of these exams because they are, quite expensive, which is nice.
Yeah. Do we have any other questions? So this is from Kyra. Hi, thank you for sharing your experiences. I am in my last semester majoring in political science at U of T, and I am interested in switching over to finance career-wise. Do you have any recommendations for me to break into a career like this other than completing the CFA? So if you, from a political science background.
I wouldn't say political science, it's more general. So I was very much like Sharlene in that my undergrad was nothing related to my future in finance. I actually was a science, I was heading towards a science degree. And then after 2 months, I thought, my gosh, I'm going to be washing test tubes for the rest of my life. And that didn't seem that appealing. So I basically pivoted and took some undergraduate courses, basic courses in accounting and marketing and finance, because I wasn't entirely sure which area would appeal to me. So I took a broader generalist degree in commerce, and that was the first step, right? So it's an accounting background is always useful in any business area that you're going towards. So that was my first step. If you have a political background, political science background, you'd be able to grasp some of the maybe some of the more macro economic and economic areas. But I would say if it's finance, then you definitely would need to get some a better understanding of accounting, and going straight into the CFA exam without having any background in those areas is a little bit more challenging. It's not impossible, but it for a lot of people who have done some kind of courses beforehand, it's a little less daunting because it's somewhat familiar. So that just keep that in mind if you're going to switch and go directly to the CFA designation path.
Yeah, and I didn't. My degree was in environmental science, so I didn't have any background that would have prepared me to write the CFA exam. So it was probably harder for me than it was for other people, but it is possible. If you focus and you apply yourself, it's possible. Anyone else want to answer that?
I would just also like to jump in and say, obviously, in this space, connections and who you know is really important, especially if you're breaking into the industry. So you'll find that a lot of people are very open to having these conversations with you. So don't hesitate to reach out. I know it can be intimidating at first, but it's rewarding for both the people that help you and also for yourself. So try to take those steps when you can.
Thank you. And continuing on questions related to the CFA charter, I was curious to know if joining the CFA Society at a student level is helpful in terms of access to jobs or networking with professionals. And what's the expectation in terms of CFA exams given for a new graduate when applying for jobs to Prime Quadrant? That is from Kriti.
Yeah, maybe so I'm from Ottawa, so I was a pretty active member of the CFA Society Ottawa chapter back when I was writing the exams, and I actually found it tremendously helpful. It was a relatively small network, but a rich network, and I got to meet other people as well who weren't necessarily CFA charter holders, but were in the industry. So in terms of networking and access to jobs, I think joining your local society is pretty much a no-brainer. I don't actually understand the second part of the question. What's the future of CFA exams?
I think yeah, saying like, what is the expectation if you're working at Prime Quadrant in terms of the charter?
I don't think that there's been any clear expectation. Signing up for level 1 is obviously an advantage, I would say, because that demonstrates interest and commitment for sure.
Yeah, I would say it probably depends on what role you want to have long term at Prime Quadrant. And I know that there's one of our colleagues has been struggling to get through all 3 levels of the charter. And the conversation that I've heard is, well, that's not a problem. There might be just a different role for you here that's more suitable for your skill set. So we're really about identifying and encouraging and fostering every person's skill set. Not everybody needs to have their charter to work at Prime Quadrant. From Gabriel, we have a question. Thank you for sharing your experiences. Does the CSC hold any credibility in the finance world? And how much more effective is the CFA in capturing a recruiter's attention? As a student graduating this year, I plan on studying to get my CFA in the future. If I can't land any interviews for postgraduate jobs, what should I do after I graduate while I study for my certification?
So, yeah, maybe I'll start, Deborah, and you can jump in, but I took the CSC. I think I took it probably around the same time as you, Gabriel, like in my last year. Definitely useful. Getting the CFA is like, again, going back to like the CFA level 1, maybe you need a lot of prior knowledge. CSC I would almost put as one step before that. So it's a good baseline knowledge, especially if you haven't, done a business degree. So I think it's definitely worth doing, and it's definitely not as huge of a time commitment as the CFA. So I think it's definitely worth going and worth doing, and will kind of set you apart versus some other people looking for similar roles. With that said, the CFA is definitely going to be, more of a pull when you're talking to recruiters, but that takes a long time to get through all of it. So I wouldn't think of it as kind of one or the other. I think it's useful to kind of have both. Start with the CSE and then maybe work towards your CFA.
So I would echo those comments from Cameron. The CSC, for those who are not aware, there's the Canadian Securities course. So the name itself is showing some differentiation from the CFA charter, which is basically it is more North American, right? More US focused. So unless the curriculum has changed, it was emphasis on the US accounting system. With CSC, you do have that Canadian element. So like Cameron and I had also taken the CSC as sort of as a stepping stone before the CFA charter, sorry.
Anybody else have a question today? Or if not, I'll let everyone on the panel offer kind of their closing comment or recommendation for everyone who's joined us today.
I actually think there's one more question, Sylvia.
I apologize. I'm just seeing that now from Karan. Thank you everyone for sharing your experiences. What advice would you give to fresh grads about building a daily habit of staying informed on financial news? Also, what are some of the best beginner-friendly sources for financial news? It's a great question. Thank you.
So I'm going to date myself by saying I still read a newspaper every day. The Globe and Mail.
The Global Mail. I also do. I read the Wall Street Journal.
Wall Street Journal. So, yeah, I mean, I honestly, at the peak, and I say this before the super rise of internet, the habit was to read 3 to 5 newspapers every morning. It'd be with the Wall Street Journal, the Globe and Mail, the New York Times, the London Times, right, would be the fourth one. So I mean, it's most people do not get print every morning, but it is important to as first thing in the day, and I still do this. Mainly because if you are to see clients or other people and they're asking about something that occurred overnight, you don't want to be the deer in the headlights and be completely oblivious to something that's really affected the world, not just finance. So it is a good practice to go through at least good news sources in the morning to be able to as a daily routine.
I'll echo what Deborah said. My personal favorite is probably the Financial Times as it concerns financial news. It's London-based, but it takes a global perspective. And then for the more localized, Globe and Mail tends to be my go-to for more Canadian-oriented news. But
The only thing I would echo to both Deborah's and Mussie's comments is just have more than one news source. I mean, we've seen a lot in like kind of the political spectrum over the past couple of years, but a lot of these, websites lean one way or the other. So it's important to get, good scope across all of them and get good diversity of opinion. The only other alternative thing I would say is newsletters I find actually really good. So there's like one that I get every morning by PitchBook and one by Axios. And essentially it's a good time saver if you don't have time to sprawl through 10 different websites. They've collated like the 10 biggest stories over the past day or whatever it may be. And those are a good thing, maybe a good one for people kind of getting into kind of reading these news sources. It brings out the key points for you to focus on. So those can be quite useful.
I agree with you, Cameron. I love PitchBook's emails. I think they're incredibly informative, and they start to paint a picture of the financial universe through a lot of storytelling. One of my personal favorites also is The Information. The Information focuses more on venture and private investing, but it's incredibly deep, interesting, rich journalism in the financial sector. Anybody else have a source they love? So I think that's our we have one more. Sebastian, are there any internships at Prime Quadrant for finance students?
So we have an internship position on the investment team that's kind of rolling every semester. So we post those on our website, when they're available. I think we're looking to post one within the next couple weeks. So keep your eye out for that. And that just works specifically on the investment team. Although there is scope if, you wanted to work on the consulting team or whatever. We're pretty open in terms of, getting you a lot of what we talked about today is getting you diversity of experience. So very open to that. But yes, we'll be posting something within the next couple of weeks, I would think.
Great, thank you. And I'm probably the newest hire to Prime Quadrant. I've only been with the company a few months, and I highly recommend it as a place to do an internship because it's an incredible culture and you'll learn a lot here. So thank you, everyone. Any parting comments from our panelists today?
If I may say, things happen for a reason. So if things don't seem to be working out, stay positive. Perspectives change, situations evolve. The one thing I will leave you with is I've learned that there are 3 things in my mind that are needed for success. And this is all things, not just in finance. The first one is perseverance, because you're going to be kicked so many times. You have to keep picking yourself up and pushing forward. The second is passion. You have to love what you're doing, because if you don't, it's going to be really tough to drag yourself out of bed 30 years into it if you don't look forward to a new day. And the last thing is integrity, because without integrity, the first 2 mean nothing.
That's an incredible note to end on. So thank you, Deborah. Thank you to everyone who joined us today. And we look forward to seeing you at another webinar in the future.